Good morning. Today is Sunday, September 7th, 2025, and this is the weekly Bitcoin price forecast looking at where Bitcoin went in the last week and where it could potentially go in the future. All right, so this is the first full week of September, and overall it's been off to a relatively good start. We are up for a couple $1,000s. I mean, we're still very much so in this range right now. If you look at it, we're really at the same price that the high price in December was around 108, and we're still sitting around 111 at this point, almost a year later. 9 months later, we're at 108 to 111. The month started at 108, and so you see, like, that's right where we peaked at in December, and we're kind of where we peaked at in January as well. Then we had the dip off, and you see we've just kind of been in this range ever since. So at this point, 2025 was really a setup year. It has been honestly a very slow year. I mean, you look at Bitcoin overall; it's only up, I don't know, like 20 to 40% at this point from the start of the year, and I don't even think it is. I don't even know if it's that much. But year to date prices, you look at things like Ethereum. Ethereum's up about not even 40%. Things like major tokens like Solana only up less than 10%. So it seems very slow, and for all intents and purposes it is. But there's been so much stuff going on in the background to set 2026 up for a fantastic year. Not to say that the rest of 2025 will be great too, because I really think it is, and we'll talk about that a little bit later. But most of this year really has been either ranging or down. So like the year started off down. We're looking at the monthly chart, and then it just recovered. So I mean, if you caught the low from 82 to 120 something, that's up like 50%. So that's pretty good. But if you were just holding the entire time, you're not doing I'd say the best right now. You're doing well. I mean, it's still doing better than the S&P and everything like that. So I mean, all things considered, it's pretty good. But it's been a pretty slow year, all things considered. So right now, again, first week of the month, we are up about 2%, 2.75%. And I expect that to keep climbing for reasons that we'll talk about a little bit later, largely interest rates. And I just see them cutting pretty soon here. So weekly chart. We see the moving averages are in full swing at this point. We've had a couple taps of the 50 moving average. Boom, boom. 50 moving average on the weekly chart. To hit the 50 moving average again, we would have to pretty much come down to about 100,000, a little below 100,000, which I just don't see as super realistic at this point, especially considering that they are just knocking on the door to cut interest rates at this point. Even if you look at the overall trend at this point, let me turn on the drawings here. You have the overall uptrend that is this green area. We are touching this. I keep talking about it. We came down and we touched the short-term hold to realized price, and then this escape velocity line. You gotta zoom out just to show you what I mean. 1 tap, 2 tap, 3 tap, 4 tap, 5 tap, 6 tap. This is a very strong line. This white line right here. Very strong line, and we see that it has not been violated yet. And even when it did go below here back in June of this year, it just shot up. It sprung up. Like, it came here, touched it, couldn't. This is what, December of last year. It attempted again in January, couldn't do it, came down, recovered, and then, couldn't quite fully do it, but it didn't. You see, it didn't go all the way low again, back down to this, July level. Like, well, I won't say July level. It didn't come all the way back down to the trend line. So that's a good sign. It broke above, and this is a strong break above. It broke and held, and now it's testing this line again. So I see at this point that we're just going to continue on to the upside. And so, like, again, the next testing area is going to be around 130. It'll be around 130, and then, like, we'll just kind of range here probably for a little bit, come out, retest it, and then just keep going. So I see this trend continuing on into 2026. And from what I see, this will just be a delayed cycle. So once we break out of here, then we are really in rarefied territory, because then there's nothing historically that has held it. So again, all of the historical price action below this line, that's cool. This is the final frontier. This green line right here is the final frontier, in my opinion. And then from there, it's just off to the races at that point. There's nothing really from a technical perspective holding it back. let's see where we're at. I mean, on the weekly chart again, we're in this bull flag area, right? So you have this bull flag that has come down, and that's all this thing has been. This whole time, this has been nothing but bull flags. You had a range here. One, you had this range. Then you had this bull flag. Then you had this bull flag. Then you had this smaller bull flag. Then you had this other bull flag right here, right? You had all these bull flags, and what happened every single time after it got to kind of the bottom area of it? It just shot up. It shot up precipitously, and I think we're going to see that again, especially now that, again, I'm going to say it one more time before I really go into detail. They're going to cut interest rates pretty soon. It's almost inevitable at this point. It was speculated before, but now just looking at the economic data, it's almost inevitable. So yeah, that's pretty much on the weekly chart. Let's look at the daily chart real quick. Your bull flag kind of runs here, and actually, I mean, you can kind of widen this a little bit, to see that we're getting down to this area. And here's your 200-day moving average. It's still creeping up. It's almost at your short-term hold to realized price. It's almost at this escape velocity line. And then, we kind of range around this 100-day moving average. So we see it not really going too much lower than that. So now that it's having trouble here, it's really going to have trouble if we start getting down to the 200-day moving average. So that's why I say going back down to 100,000 is really unrealistic in my opinion. So, we see now that we'll probably have this spring up period pretty rapidly here to go from 110,000 to 30,000, probably in a matter of weeks. The way that Bitcoin moves historically, so days to weeks, it'll just end up moving up. So I think the latter half of September and then the last quarter of the year are going to be fantastic for sure. 4-hour chart still in the downtrend, but we see that breaking up and just continuing to test these different levels. So once it breaks above this 200 moving average at about 113, then we'll be at a pretty good spot there. Okay, that's enough on the charts. Now let's talk about the meat of it here. So I talked about it last week. This was a very labor heavy week. And it's funny because you had Labor Day on Monday. So Labor Day on Monday, and let's look at each of these. So I will say that pretty much every labor statistic that came out economically underperformed this time around. So I'm now looking at forecast versus actual. So the ISM manufacturing PMI that came out below expectations. JOLTS job openings, which is a labor statistic, projected 7.3 million, came out at 7.18. That's underperforming. ADP non-farm employment change, 73,000 versus 54 actual. That came out below expectations. Unemployment claims 230K versus 237K. So having a higher unemployment is actually worse. You want obviously less unemployment. So that came out underperforming. You want a lower number here. ISM services PMI. I think this number, if it's above 50, then that means expansion of the services industry. And manufacturing is contracting because it's below 50. The services sector is expanding since it's above 50. So that was a pretty good one. Average hourly earnings met expectations. Non-farm employment change was abysmal. Let's look at this. 22,000 versus 72. And this is the second month in a row that it has just completely underperformed this metric. So, last month it was projected at, what was this? I can't even see it on the chart. Anyway, like this month it was 75,000 versus 22,000. And then if you look at it too, let's take all this other stuff out. So let's look at the actual versus the revisions. So one thing that I look at is they can go back later on and change these numbers like, oh, okay, well, this number was higher. This is actually higher than what we projected. But you see pretty much since 2022, the revisions have been generally lower than what was actually reported. And I don't think that's going to change. So like these, this is the only month, January 2025 was the only time it was higher. All the other revisions have been lower. July 2025, that was down to 0. August 2025, that was below, and so on and so forth. So we see that the metrics are now both underperforming the forecast and the revisions are bringing it lower later on. So the data is not really, I guess, accurate, if you want to say, like, especially on the first go. These revisions are they're different, right? So um, unemployment rate. So the unemployment rate that was 4.3%. That was it was within expectations, but it did increase just a little bit from month to month. So and unemployment that rate those I think it comes out a couple times a month. So or maybe on a weekly basis. So the next one, the big one that's going to come out next week is your core is your CPI. Your both your core CPI and your CPI. So um, at this point, inflation actually has been running a little bit hot over the last couple weeks. So I mean, we're at 2.7%. They're forecasting 2.9. So I mean, maybe it comes out at 2.9. Maybe it comes out at 3. Who knows? I think we're starting to see those lag effects of tariffs at this point. So yeah, I mean, we hit a low here around May, which was a month after the tariffs came out, and then since then it has been a gradual march up towards like 3%. So um, if it does hit 3%, I am expecting that if it comes below, the Fed is definitely going to cut interest rates in the following week. But if it goes above, I mean that gives them a little pause not to. But either way, I just see them cutting interest rates because again, these job numbers are abysmal, and that's part of the Fed's mandate is to maximize employment and keep prices stable. Neither of those are happening right now because the job market, we're not maximizing employment and the prices are not stable. We see them increasing due to tariffs and whatnot. So tariffs or whatever other economic factors that are going on, but overall, you're just seeing that the economy is not great really for most people at this point. So I am really projecting an interest rate cut. And it's not even just me. It is. I like to go to poly market. It's the forecasting and betting markets across several metrics. So Fed's decision in December. This is on poly market. There's $75 million of volume held up in this bet for September 17th. So about a week and a half from now, when they make this decision, they are saying right now an 87% rate, an 87% odds of a 25 basis point cut. 10% odds of a 50 basis point cut and like 3% odds of no change at all. So basically at this point, what this is saying is we're going to get a cut. The only question is how big. You have a higher odds of a 50 basis point cut than you do of a no change cut. And, an increase is just out of the question at this point at 0.3%. So, and let's look at October. There's another meeting in October where they have to decide on rates. Right now, that's at a 53% chance of 25 basis point cut, 41% no change, and then 50 basis points. So I think we'll at least see a 25 or 50% basis point cut somewhere within the next month, right? So I think by the end of the year, you're looking at probably about a 75% basis point cut on interest rates overall. So we'll see how that goes. We will see how that goes. Another thing you got to look at is the Bitcoin ETF flows because really, if you look at it, this has been the driver this entire time. Let's look at it. So from March, if you look at Bitcoin's chart from March to really kind of October, November, there wasn't too much buying. There was buying, but not a ton. And then you see buying really picked up as Bitcoin's and Bitcoin's price started to rise. And then you see that the ETF flow, it kind of stalled out in January, February. They actually bought up a little bit at that point, and it stalled out. And then they bought up and bought up and bought up until about July, and then stalled out again. And you see that price for Bitcoin stalled out at the same time. So within the last week, they've actually done quite a bit of buying. It's been relatively balanced. So overall, bought about 630,000, and then also sold about 380,400. So overall, this has been a buying week, which it's been above average on the buying and the selling. So either way, especially with these $300,000 days coming right off of the Labor Day weekend, and this was a short week too. So I think we're starting to see more and more buy pressure as time goes by. So Bitcoin is going to go up. It's going to go up. this much I'm confident in, and that's why I'm still doing these videos. Is because like there's no signs that it's going down. There's no signs that it's going down. Now it may stall, but there's no real signs or indication that's going down. And that's reflected even more so as I like to look at these Bitcoin Magazine Pro. They have a lot of good Bitcoin charts, and you can find them on like Glassnode, not QuantView, Glassnode. Look into the Glass. Was it a couple other major on-chain metrics? But what I'm looking at, this is reserve risk, and I mean it's a pretty easy to read chart. You don't have to worry about all this, but just red and green. We'll keep it very simple. When it's in the red zone, it's a good time to sell. It's pretty risky. There's not a lot of reserve risk there. But when it's in the green zone, hey, this is a great time to buy. And we see this is right. The green zone is pretty right, generally right before it takes off. And then, green zone right before it takes off and whatnot. The interesting part about this cycle, going all the way back to 2022, it entered the green zone around February of 2022. We're almost at February of 2026, 4 years later. It has been in the green zone the green zone or lower. It doesn't matter. If it exits the green zone on the low side, that's even better. Rock bottom prices here. But if it's still at $100,000, it's still in the green zone. $111,000, it is still in the green zone. So what that's telling me is, hey, we're gonna go much higher. We haven't even gotten into the middle portion of this yet, and we see even last cycle it didn't quite get to the red zone. So I think this is a sign of maturity at this point. Just to say that, hey, it was, back in the past, there were periods, 2017, 2013, so on and so forth, 2011. There were legitimately periods where it's like, hey, Bitcoin was a risk. Bitcoin's been out for 16 years at this point. It's been out for 16 years. So it's not new technology. Like I say it all the time, like the Apple iPhone is 16 years old. You wouldn't call that new technology. In the same way that Bitcoin is not new technology, it's been here, and it really has matured. The maturity and the adoption phase for Bitcoin has been so much longer than things like the iPhone that quickly became ubiquitous because they were already associated with things like Apple at this point. But now the reserve risk is so low that there's no bad time to buy. There's really no bad time to buy Bitcoin at this point. I just see this maybe even slowly. Even if it continues this trajectory, we're not going to hit a red zone for quite some time. Yeah, man, things are great. Things are absolutely great. I'm not worried at all for this. So I'll go ahead and cut it there. Again, as always, this is a good time to buy. I think your biggest bet is to accumulate, and scarcity wins at this point. So overall, we're going to keep it pushing, right? So other than that, this has been Chris Talks Crypto. Check out your crypto-based resources on christalkscrypto.com, and I will see y'all on the moon. Take care. Bye-bye.